So in this video we're still doing the direct method. Now I finished showed you how to do cash received from customers, right? We did this whole calculation. There's two components as I said, and we got the figure, right? That goes under cash received from customers. Now cash received, the next one, cash paid to suppliers and cash paid to employees are two different components, right? Complete different components. So first, when you're working out, you're going to do cash paid to suppliers, which is we're doing this in this video. Cash paid to suppliers, right? So cash paid to suppliers. So I'm just going to write short form here. Okay, so firstly, when you get this final figure, you're going to put in brackets over here in this block, right? We don't put brackets as 550,000 because this was cash received. That's income, your cash coming in. Okay, so how do you work out cash received from suppliers? I told you cash received from customers, there's two components, sales and trade receivables, right? You look at those two components. Cash paid to suppliers is going to be three components, right? It's actually simple. So, your first component is to look at your cost of sales. The second component is to look at your inventory. Third component is to look at your trade payables. I repeat. First component, cost of sales. Second component, inventory. Third component, trade payables, right? So that's how you work with this cash flow. So to get cash paid to suppliers, which is just this part, right? Cash paid to suppliers. How do we do it? I told you the first component you look at is cost of sales, right? Always the first component, there's no catch. You just put that figure. So cost of sales 392,000. We put 392,000, right? 392,000. Perfect. So we got that 392,000, right? Now, the second component. Now we're done with the first component, which is cost of sales. Second component is inventory. If you look at inventory, it increased. Now, beginning of the year is X0, end of the year is X1. So inventory went from 65,000 and 88,000, right? So obviously it's an increase. So think about it logically, right? Your inventory in the business increased, so you bought more inventory. So this per cost of sales, right? This 392,000 is like your products in the business, right? But now you also bought more inventory because it increased. So plus it by the amount it increased by. So 88,000 minus 65,000, what's that? 88 minus 65, don't worry, my math skills are not that good. It's 23,000. So you bought 23,000 more worth of goods. So add 23,000 to that purchases figure of 392,000. So 23,000 I said, yeah, 23,000. So we're going to add 23,000. Okay. So then we're done with the inventory component. The last component which we're going to do is your trade payables. Now, when I look at this trade payables, I see it increasing. Most of the time, it'll increase. What happened over here? You owe money to your suppliers, right? Cash paid to suppliers. We're dealing with how much of products we bought from them, also how much we paid to them. So if your trade payables, the amount owing from suppliers went from 20,000 to 28,000, think about what happened here. If you really think about this, right, you're owing them more money. If you're owing them that, how much? It'll be 8,000, right? Yeah. If you're owing that 8,000, that means you never pay cash to them, right? So critically think. So if that 8,000 rand, you never pay them because you're owing the 8,000, just say minus 8,000. Literally go here and say minus 8,000. My three components are done. Let's see if we get to an answer. So 392,000 plus 23,000 minus 8,000. Is it 8,000? Yeah. It's 407,000. 407,000. So let's see if this corresponds. 1 second. There we go. 407,000. There we go. Now see how thing complicates the did it over here with ledgers. If you do it like this, you get full marks. I feel like this is better than the ledgers, but the ledgers too are, if you know your ledgers, you can do it, right? You bring down, do the cost of sales account, you bring down the balance of the inventory, closing balance of the inventory, cost of sales there. The balance 450,000 will be like the purchases of the year, so it'll actually be this number plus this number. Then for your payables, you'll bring down the balance of the payables, closing balance of the payables. Then put the purchases figure, right, which you got from here. And then the balancing figure will be your final figure for your cash flow. But you see how three numbers I did over here did the exact same answer? That's called technique. And yeah, that's three components. Now the next one we're going to do is cash paid to employees, which is the most complicated one, because over here you're gonna it's gonna like it's you take your operating expenses, all these things. I mean, look how complicated the slides make it, right? But SkillSpark is over here. I mean, look how complicated. SkillSpark over here is gonna give you four formulas, and you can do this in a minute, literally. So watch my next video. Yeah.